Asti Seth, Vice President with Sovereign Risk Group. She represents Moody's. She joins us live from New York now. Asti, good morning. Thank you for joining us. In your recent note, you've just said that rupee will clearly be a big impediment for Indian economy going forward. So what are the considerations and how do you think the recent decline in rupee will hurt Indian economy?
Well, there's two ways in which it clearly will. The first is that imported inflation, especially commodity inflation, fuel costs, etc., will tend to go up in rupee terms because of the fall in the rupee against the dollar. And this then has an impact on the fiscal deficit as well because, of course, the government expenditure, for instance, on imported commodities like fuel and fertilizer goes up as well. And I think these are the two factors that have always been constraints on the Indian economy. Inflationary pressures tend to be high in India, and the fiscal deficit also tends to be high. And what's going to happen as a result of these pressures remaining high, of course, is that the RBI now has limited room to provide stimulus to combat the growth slowdown. And so that's what we meant when we said that, the depreciation in the rupee will have macroeconomic impact.
So, Atsi, what happens in case of, the sovereign rating of the economy right now? Does the rupee situation increase the probability of a downgrade, or does it imply that revival gets prolonged now?
Our rating outlook, Aisha, is stable. And it is stable because we have anticipated that, of course, the economy will not go along a very smooth trajectory at this point. There's uncertainty globally. There is not a single economy that really can, we can say with any certainty will have a very smooth path over the next year or so. And India is among those economies. So in that sense, our rating outlook is stable. What we're pointing to is that the constraints that the macroeconomic situation has been under over the last year remain as of now, and it doesn't seem like growth is going to revive very soon.
Atsi, earlier this week, Reserve Bank of India has decided to really attack the short end of the market in order to stem the free fall in rupee. They have decided to suck out liquidity. Do you think that is a cruel choice? Because if rupee does not stabilize because of global volatility, Reserve Bank of India could end up hitting GDP growth as well?
I think the RBI's moves are really a signal. And I think what the RBI is trying to do is signal to markets that it is going to take some measures to bring back stability into the market. What we've seen over the past couple of years, in fact, is that the RBI has never really, and it's been very clear about this in its own statements, that it doesn't target a particular level of the rupee. It doesn't step in to intervene aggressively by selling dollars to defend a particular value of the rupee. But in the last couple of months, what had happened was that the decline in the rupee's value was so sudden and so steep, 9-10% depreciation over a couple of months, that the RBI is now signaling that it's time for it to step in and stem that decline. I don't know that they're necessarily attempting to appreciate the currency significantly. And of course, that a significant appreciation depends on how the current account deficit behaves, how, as you said, portfolio flows behave. So this is more a stabilization than I would say a significant appreciation that they're attempting.